Robust old trading approach that is great to trade on trending asset. And you know that crypto is trending a lot. So let's take a look at it. Firstly, what's trend following about? Well, it's all about cutting your losers and letting your profits run. It means that we are trying to catch trends. And if the trends are in the markets, we are sticking with these trades. And if the market is in a range bound period, we are just getting out of position as quick as possible to keep the loss as small as possible. But what is a trend? Well, simply said, trend is such an environment when the market is making new higher highs or new lower lows. So whenever the market is making new higher highs, we can call it a long trend. And whenever the market is making new lower lows, we can call it short trend. That's simple. But how can we measure the trend, or what indicators can we use to measure the trend in general? Well, one of them can be, for example, Keltner Channel. What it is saying to us is that whenever the market breaks up through the upper bound of Keltner Channel, we are in an uptrend. And whenever it pushes through the low boundaries of it, we are in a short trend. That's simple. We can also use Bollinger Bands. It's more or less the same, but they are incorporating some volatility to it. But the logic is exactly the same as with Keltner Channel. But we can also use moving average. Moving average is super simple. And in trading, very often the simplicity is the key, because the more simple the solution, the lower the probability that you have something over optimized. So for example, in this example, we can call long trend anytime the market is above its moving average. This one is 50-day. And we can call it short trend anytime the market is below the moving average. That's simple. Let's take this example and build very simple first trend following strategy. This one is about entering into long positions anytime Bitcoin is crossing its 50-day moving average to the long side, and closing the position anytime Bitcoin closes below its 50-day moving average. That's the only rule. And the result, well, pretty good if you compare it to Bitcoin buying and holding. Why it's such a huge difference? It's more than 7x. The main reason is that we are making the drawdowns slightly smaller, but we are taking advantage of the Bitcoin's long trends. And that's the key. We are cutting losses, but we are letting our profits grow. But this was Bitcoin only. Why shouldn't you trade Bitcoin only? Well, the main reason is that as Bitcoin is getting bigger and bigger, more and more liquid, it's also less and less volatile. You can see it on this chart. In 2020 and 2021, there were many 10 days that were more than 20% volatile. On the other side, you can see that as Bitcoin is getting bigger, the volatility is reduced by 50% or even more. If you compare it to the whole crypto market, of course, 2021 was exceptional year, but other than this, you can see that the whole crypto market is more or less keeping the volatility the same. And that's the key, because we need trends, but we also need volatility. The more volatile the asset, the better for us, the more we can make if the market really starts trending, because volatility is key to kicking up the trends as much as possible. So let's get to our trend catcher strategy. Firstly, you have to understand what a regime filter is, because we are using regime filter in this particular strategy. Regime filter is basically telling us when we should start trading and when we should be out of positions completely because the environment is not the greatest one for our trading. So for TrendCatcher Long, this is the strategy that is only trading to the long side. We are using such a regime filter. We will start trading whenever Bitcoin is above its 50-day moving average. You already know this example. So it means that Bitcoin is in a long trend, and you know that Bitcoin is still a king. Its market cap is about 57%. And whenever Bitcoin starts trending, usually the whole market starts trending too. So we are taking advantage of it. And whenever Bitcoin is below its 50-day moving average, we are calling it regime filter short. And in such an environment, we are trading to the short side only. So that simply it is. We are usually saying when to trade to the long side and when to trade to the short side. Rules for TrendCatcher Long. So firstly, the regime filter has to be set up to the long side. The entry condition is that the daily candle has to cross above its 20-day moving average. So whenever an altcoin crosses above its 20-day moving average, we are entering into position, and we exit the condition whenever the altcoin is closing below its 20-day moving average. We are prioritizing the coins with the highest liquidity in last 4 weeks, and we can take maximum 20 positions. It means that you risk 5% of your capital per each trade. Now look at the results of TrendCatcher only to our Bitcoin only trend following strategy and Bitcoin buying and holding. The results again are huge. Why? Because we are catching long trends and we are staying sideways whenever the market is dropping a lot. Of course, there are drawdowns, there are many drawdowns, but over the long term, this strategy is definitely overperforming Bitcoin buying and holding. Now, you really have to understand what trend following is all about. As I told you, it's about cutting your losers and letting your winners run. You can see it on this chart. Basically, the green points are your winning trades and the red ones are your losing trades. You can see that we have many more losing trades, but the losses are much smaller compared to our winners. Winners can make 10, 20, 50, 150, 200, 300, sometimes even more percent. Basically, what you can see that trend following is about catching outliers. That's why we are not using any profit targets, and we are really letting our profits run, and we only exit a condition if the market closes below its 20-day moving average. Now let's look at TradingView. By the way, you can download Pine script for TrendCatcher in the link below, so definitely click it right now. And you can see the results on any single asset. Of course, there are assets on which this strategy would excel, like, for example, Ethereum, Bitcoin, basically any coin that is trending to the long side a lot. This strategy would take advantage of it. You can see it also, for example, on Solana or even on IOTA. It's still making more money than buying and holding it. I don't know if you still remember this coin. It's close to that right now. But you can see that we really need trends to the long side. That's something that is not on this coin anymore, or not that much. And that's why you have to have some kind of ranking based on which you would be trading the coins. And that's why we are choosing the top biggest ones based on liquidity. Again, another example, EOS, I would say that coin these days. And what's really important is to understand survivorship bias or selection bias. Basically, what many retail traders are doing is that they choose current coins, they choose Bitcoin, they choose Solana. They basically choose coins that are trending a lot these days, and they test on such coins the strategy they are building. But there is huge bias. Why? Because you didn't know a year ago or 2 years ago that such a coin would be trending too. And that's why you have to have some ranking system, some ranking strategy that is telling you these days you will be trading these coins, tomorrow you will be trading those coins, and so on. You can see how big difference is if we test the strategy TrendCatcher Long on current top biggest coins compared to all top biggest coins 4 years ago. This is this result, and this one is the real one, because this one is the one that is trending the real coins. We are not forecasting, we are not predicting which coins will be trending, which coins will be the biggest ones. We are just taking the biggest coins today for trading tomorrow. Very important. This result is not real. It's something you can only make in a backtest with the advantage of hindsight bias, basically. And it's not possible to trade this way into the future. Now, rules for TrendCatcher Short. So again, very simple. Firstly, regime filter on Bitcoin. Bitcoin has to be below its 50-day moving average. The entry condition is that the coin is breaking below its 20-day moving average, and exit is again if the coin is closes above its 20-day moving average. Money management is the same as with TrendCatcher Long, so we can skip it. And let's look at the results of TrendCatcher Short right now. Well, nothing great, right? TrendCatcher Long had much better results. Of course, because crypto market is exponential market to the long side, not to the short side. That's why these results are much worse. We should expect it. But what's giving us is different exposure, because this strategy is making money, for example, in 2022. And in 2022, TrendCatcher Long is losing or is going sideways. That's the best performance that such a trend strategy could deliver in non-trending environment. But TrendCatcher Short gave us profit of 40, 50, 60% in such a year. Of course, in 23 or 24, the strategy was going sideways. Why? Because the market started trending to the long side again, and TrendCatcher Long was the strategy that was making money. But on this chart, you can see the advantage of trading both of these strategies together in a single portfolio, because TrendCatcher Long is making money in long trend environment. TrendCatcher Short is making money in short trend environment, and together the results are much, much more stable. Why can we use the same capital and use it between two strategies? Well, because of correlation, or more precisely, because both strategies are uncorrelated or even negatively correlated. What it means that they are creating drawdowns, but also profits in different periods. And thanks to it, if we use the same capital, it won't happen that often that the strategy would start making drawdown. Let's say TrendCatcher Long would be in a drawdown, then TrendCatcher Short would start trading, and it would probably get out of the drawdown. It wouldn't make the drawdown deeper. That's the benefit of trading uncorrelated strategies. Now, you have to understand that trends are pretty rare in the market. Well, honestly, trends in the market are more or less 3 to 5% of all time. Usually markets are in a range bound market, but new, let's say 40 days highs are created only 3% of all time. And that's why you cannot expect that trend following only strategy would deliver new profits on very stable basis. Quite opposite, most of the time your trend following strategy will be in a drawdown. You really have to understand the psychology of trading of trend following strategy, because if I would show this equity curve of this portfolio, long, short, trend catcher, you would probably jump and start trading it immediately. But don't forget that such a portfolio can have a drawdown of 50% without any problems. When? Well, whenever the market is going sideways only, there are no long trends, there are no short trends, and such a portfolio is basically building a drawdown. Again, another example, by the way, the drawdown was this one, so we completely forgot it. We are on new all-time highs, but the portfolio again is building huge drawdowns. By the way, this drawdown is more or less 50% again. Why such a big drawdown? Well, because the market is going sideways. The whole crypto market is in a sideways condition for more than 6 months. And if the market is not trending to the long side or to the short side, we simply cannot make money with trend following strategies. That's the reason why we prefer trading even more strategies in the portfolio. We prefer trading short-term momentum, long-term momentum, or trend following, which is basically trend catcher. And we are also trading mean reversion strategies together in a single portfolio, because then the drawdowns are smaller, shorter, and the whole trading is much more stable. Okay, that's it. So once again, don't forget to click the link below to download your Pine script for TrendCatcher, and click here to continue looking the whole crypto trading series.